while this 50-day moving average is holding support right now, there's a lot of stop losses that are set right at the 50-day moving average on kind of a professional computerized trading algorithm basis. So if we take out the 50, we could see some fairly sharp selling. Here's what you need to know before the bell this morning. Last Friday, not this past Friday, Friday before last, we had this fairly significant market crack. That market was down about 2.7% for the day, touched the 50-day moving average. We spent all last week just trading between the 20 and the 50-day, just stuck in this very, very tight range between these moving averages. The 20-day, which has been running support for the market, has now turned into resistance here as of Friday. Again, but support right below that at the 50-day moving average as these continue to run very, very close to each other. This morning, futures are pointing higher. So we're expecting this market to try to break above the 20-day moving average today. Now, again, as we talked about last week, the fact that we finished the week below the 20-day moving average, and again, this is how we've talked about, be careful with your stop losses sometimes. A lot of times people will set a stop loss at a moving average and they go, well, as soon as I break below that, I'm going to sell everything. So they get out of the markets, and then the market immediately bounces back above it and then continues to move higher. And so a lot of people get frustrated with trying to, hold stop losses in portfolios because they get tripped out of them. Well, this is why we want to give it a few days. Sometimes when you break these moving averages, give them a day or two to see if they can get back above that or not. And we failed to really we did get above it temporarily, fell back below it by Friday. So again, that 20-day moving average is now acting as some decent resistance. So again, just because the markets are pointing up this morning, Dow futures are up about 43 points, the S&P's up about 9-10 points this morning. So it's not a really strong open, but we do need to see some follow through this morning. We need to open up, get above the 20-day moving average and stay above it this week. Otherwise, that's going to continue to build resistance pressure for the markets, and that's going to start to threaten this 50-day moving average a bit more. And again, while this 50-day moving average is holding support right now, there's a lot of stop losses that are set right at the 50-day moving average on kind of a professional computerized trading algorithm basis. So if we take out the 50, we could see some fairly sharp selling. So watch that very closely here because that's going to be your key support this week. We need to hold above that this week. And then the market needs to get back above this 20-day moving average if we're going to start to try to move forward and start to rally towards a year end. Now, again, there's a lot of reports out this week. So this week will be pretty much just dominated by earnings. So if companies come out, if Netflix and others come out this week with really good earnings, good positive outlook, et cetera, I would expect that we'll climb back above this 20-day moving average. So again, there's going to be some good support this week from earnings. Next week, again, even more support potentially, depending on what Amazon and Apple and Microsoft say next week in terms of their earnings. There's going to be a lot of potential buying here. So again, just be a little bit cautious being overly bearish here because the markets are still in a very bullish trend. We're still holding the 50-day moving average. The trend is positive. We did get kind of oversold on a relative strength basis, kind of rallying back now. So we're starting to see a little bit of relative strength come back, but we're still on that momentum sell signal still at an elevated level. So again, there are some reasons to be a little bit cautious here, but overall the market remains bullish and we're moving into the two seasonally strong months of the year, November and December. So as we get through earnings season, buybacks come back, we should have a good earnings season. That'll help support markets. But again, just be a little bit cautious with your risk management and just navigate it and you'll be fine. But markets should end higher this year than where they are currently, at least at this juncture. That's what you need to know before the bell this morning.